And with that, let's kickstart our first conversation on the show. We have James Knightley, Chief International Economist at ING with us. James, great to have you with us this morning. And I was just looking at the expectations from the BOE meeting. And even here, just like the Fed, it seems rate cut expectations are being pushed back in many of the bigger markets. But yet, equities are not complaining. Equity markets are hitting all-time highs, including on Wall Street, of course. What's your sense of the macro setup right now? And what are your own expectations from the Fed?
Yeah, I mean, we're starting to see some increasingly positive developments on the inflation side of things. We are seemingly getting some better US numbers coming through, getting some better European numbers coming through. So this ability for the global central banks, the big major central banks, to deliver a soft landing is, I think, still buoying equity markets, but it's also giving something for bond markets to cheer as well, because the prospect of lower interest rates over the next 18 months or so is also supportive there too. So I think it's this faith that we've got that we're starting to see some softer, cooler activity numbers and some better inflation data. And that is giving the market a little bit more confidence that we're on this path to gradual interest rate cuts and a soft landing that we'd all really like to see delivered.
Well, back home in India, things are looking pretty good. I mean, recently you had Fitch Ratings raise India's growth forecast as well to about 7.2% for FY25. So growth is looking good here. We have a big union budget upon us. What is your expectation? Which way do you think the wind could blow? And overall, in the larger scheme of things, where is India placed as far as the pecking order goes globally?
Yeah, I think it's in a pretty healthy position, really. I can only really comment from a global perspective. I'm not an Indian specialist, but from a global perspective, it does seem as though the concerns about recessionary forces building, those are certainly dissipating. We've still got a pretty upbeat view on the US growth prospects and also European growth prospects as well. The biggest risks really come from the politics, and that's what we've got to be very, very watchful for. We've obviously got French elections coming up, we've got British elections coming up, and of course we've got those US presidential elections coming up as well. So, for all the encouraging news flow we're seeing now, which is lifting sentiments quite nicely, there's a lot of political risk out there that could really throw some awkward developments our way. And so I think markets are going to be a little bit cautious over the next few months.
All right. Hi, James. Good morning and good to see you in. What do you make of the Chinese economy? There were hints that maybe it's coming out of that lull and there could be potential bounce back going by the policy action we've seen both from the government as well as the central bank. But the last few days, data has been softening yet again. How do you read the Chinese economy?
Yeah, there is a general nervousness that, yes, we are starting to see a bit of movement, a bit of support on the fiscal side of things, but it's just not that big. And I think there's a little bit of a sense of underwhelmingness about the Chinese authorities' response to some of the risks surrounding the Chinese economy. So, yeah, there's some tentative signs that things are stabilizing and at least not getting worse. But optimism on a vigorous, strong Chinese economy is certainly not there yet. And I guess also we are very carefully watching the US election for feedback on what it means for Chinese trade, for example, because if, Donald Trump does come in and does win the election in November, he's, of course, promising 60% tariffs on Chinese exports to the United States. And also, of course, clamping down on China's ability to use third-party nations to export into the US as well. So, yeah, I think, the fact that things aren't getting worse is good. The fact that the authorities are starting to do a few bits and pieces, yeah, that's encouraging. But are we looking at a return of vigorous, vibrant Chinese economic growth in the near term? I'm still a little bit cautious on that.
Okay, got it. It's a little cautious in China. And yeah, take your point on all of these big elections, right? They're really important, specifically, of course, everything that's been happening in France of late. So, yeah, we need to watch out for this. Finally, James, you mentioned that in all likelihood, we may just get the soft landing. It may be delivered by central banks, as we all want. But what could be the risk, the biggest risk to that thesis? I mean, I can see maybe oil prices being one, because Brent oil is now above 85. Geopolitics is a risk. I mean, but what comes to your mind?
I'm still a little bit nervous about the US jobs market. I think it's been really robust. But what are we looking for the Fed to deliver interest rate cuts from September? Well, we're looking for three things. One is more 0.2 month-on-month inflation readings, 0.2 or below. And I think that's achievable. So that's a good story. Second, we're looking for cooler consumer spending. That's been the real driver of US economic growth. And if that cools, that will give the Fed a bit more confidence that it's in a position to start moving policy a little bit looser. But the big story is unemployment. Unemployment's already risen from 3.4 to 4% in the United States. And we're starting to see jobless claims numbers rising. We're going to be watching those on Thursday. And also, we are just a little bit wary that once the unemployment momentum swings, it's very difficult to stop. So for me, we've got to be mindful that we want to see some cooling jobs numbers, a slight rise in the unemployment rate, but we don't want things to go too far. And I think there is just a little bit of caution again that things could start to slow down more meaningfully. Certainly, business surveys are pointing to quite a rapid cooling in hiring, and that's something I'm just mindful for. That could turn a nice soft landing story into what could tip it into a recessionary story. Is how quickly that jobs market swings.
Okay, thanks a lot for that. So that's setting it up for us as we begin a brand new day of trade and what you can expect from the global economy and global markets rather. But